Nirmal Bang, ladies and gentlemen. I'm Hiral Datia. We have with us Teresa John, CFA economist at Institutional Equities, joining in. Welcome to the show, Teresa, and a pleasure to speak to you as well. Teresa, an interesting report that you have come out with, clearly indicating whether one should be betting on the urban or the rural economy with regards to where recovery post-COVID goes. Firstly, if you could just give us a few highlights of what this report is all about.
So basically what we seek to do in this report is to look at, now with the opening up of the economy, whether we should be looking at the rural sector or the urban sector. So just as a little bit of a background, over the last maybe 3 to 6 months, we've seen a sharp slowdown in the rural sector, whereas urban, we've been seeing some support with the opening up. I mean, obviously there was this Omicron variant, which kind of slowed down the opening up. But then after that, in February, March and April, we've seen a strong recovery in most contact intensive services. Going forward, we believe that the recovery in contact intensive services will sustain. Our base case is that there will not be another severe wave, even if there is the economic impact, including on the contact intensive services, it will be much lower than that we have seen in the past 3 waves. So it may be largely a small blip, and then we go back to business as usual. So we think after the 2 years of slowdown, urban contact intensive services are likely to lead the urban recovery. And overall, we expect urban to do better than rural, but incrementally we are seeing some signs of I was saying that overall, we think urban recovery will be led by contact intensive services, and urban could outdo rural growth. But incrementally, we are seeing signs of a pickup in rural growth as well, compared to the slowdown that we have seen over the last 3 to 6 months.
Right. And with all of this said and done, if you see in terms of where the inflation goes much higher in terms of rural India versus urban India, as for the last numbers that came in, is that also indicating anything?
Yeah, so over the last month or so, we've seen food inflation go up quite substantially, both in urban and rural areas. And in rural inflation, food is a higher weight when compared to the combined index. So that's why we've seen your rural inflation go up substantially higher than urban inflation. Some of this is driven by certain commodities like oil seeds and your edible oil. We've seen kind of high inflation, and probably that is only set to go higher with the Indonesia's ban on crude palm oil export. So that is one of the things that has been driving up both urban and rural inflation. And then we've seen items like proteins, mainly your meat, fish, etc., where prices have gone up substantially over the last, at least in the month of March. And so that is also one of the factors which is pushing up both urban and rural inflation. But because rural has a higher weightage to food, your rural inflation is rising faster than urban inflation.
Right. And overall, with all of this said and done, when you're talking about the contact services, which will support urban recovery, however, the farm prices is something which is supporting rural as well. Clearly, what are the sectors and, which are indicating this, say, for example, as you've mentioned, in terms of hotel, air traffic, anything else that hits your mind in terms of showing you this recovery path?
Yeah, so in contact intensive services, it's across the board. I mean, one is air traffic, hotels, whether it's dining out, it could be your anything related to your theaters, so your multiplexes, your malls, even other recreation, amusement parks. So all of them, you generally see our contact intensive services which have been affected during the due to the lockdown, and now we are seeing opening up. Obviously, this is largely consumption by the urban affluent class, but this is also the segment which has had kind of excess savings because of the lockdown, and that is being spent. So historically, also, if you see once you come out of such a situation, you do see higher spending on contact intensive services, but the urban affluent class who have not been that much affected by the income shocks caused by the lockdown. But there is obviously a trickle down effect that happens. So when this urban affluent class starts spending, I mean, there's obviously employment that happens, and you do have people coming back from the rural areas back to the urban areas, and that supports remittances as well from urban to the rural.
Right. And overall, if you see, moving from that end, how is it that the export support is supporting the farm income? Are you seeing an improvement on that front?
Yeah, right. So from the farm income, so rural, I mean, you can divide it into, probably 2 to 3 segments. One is the rural farm income. Then you have, ancillary services provision that happens within the rural areas, employment outside the farms within the rural areas. And the third is your remittances that come from your urban areas back to the rural areas. Now, during the lockdown, we had about the 60%, that is the remittances plus the rural employment that was impacted to a certain extent. Obviously, there was higher job provision through schemes like the Narega, but it didn't supplement your services sector income in the rural areas. So now with the we are seeing the opening up, so there will be a provision for higher remittances from the urban areas to the rural areas. Will see a pickup from the farm income side. You are seeing higher exports, which actually started. That's not I mean, it's probably going on for more than a year now. You've seen higher farm exports, mainly of rice, so both basmati and non-basmati rice. And the sugar cane crop over the last 1 to 2 years has been good. So you've seen higher sugar exports coming in from going out from India, and then you had spices also doing quite well. So and now we are seeing, because of the Russia-Ukraine crisis, we've seen wheat exports going out from India, kind of stepping in for the shortfall from Russia and Ukraine. I mean, obviously there are other markets as well, which are where exports have picked up, but India has also been one of the beneficiaries of that.
Right. And overall, if you see, with all of this said and done, clearly, again, another aspect that we need to consider, as you've mentioned earlier, as well as in terms of the monsoon. 4 consecutive normal monsoons is what we've seen. How is that something which could be supporting us?
Yeah, so the IMD has forecast the normal monsoon, for the starting in June. But we've had 3 years of normal monsoon. But what we are saying is that 4 consecutive years of normal monsoon, at least we've not seen that in the last 15 years. I mean, we are hopeful that things will pan out as the IMD has forecasted, in which case that should be supportive of farm income. But we're just highlighting the risk that, if you look at history, the probability seems a little low, but maybe what the IMD says will actually pan out. So in which case, I think that could be another support for the farm incomes and overall rural income as well.
Right. And very lastly, Teresa, in terms of the government support. Now, yes, the allocations that have made to the agriculture and rural sector have been trimmed. Clearly, the rural wage growth is something which is muted as well. Do you think these could be 2 concerning areas which the government needs to look at to support rural growth?
So the government spending has been brought down in FY22 as well. That's the year that has gone by when compared to FY21, which is the first year of the COVID lockdown. And FY23, there's been a further cut from FY22 levels. And one of the reasons that the government is cutting rural spending is in anticipation that as the economy opens up, the urban job creation picks up. So I don't think there will be any significant reversal as far as the government allocation to rural areas goes. But what we can probably see is maybe increase in fertilizer subsidies, mainly because your input costs have gone up for fertilizers, and that's also linked to your crude oil prices going up. So I think on April 27th, the government has already announced additional subsidies of around 60,000 crore, which is mainly for phosphatic and potassium fertilizer. So I think it's already an increment on the budgeted allocation, and you could see further allocation even going forward if input prices stay at this level. On the rural wage growth, that has been muted, and now it's currently running below your rural inflation. So we do see some pressure there, put on the wage earning class. So the farm incomes may find some support, but the wage earning class, if their incomes are, increasing at a pace which is lower than inflation, there could be a problem for the consumption for the wage earning class. In the past, we have seen situations where higher prices, particularly food prices, kind of pushing up your wage inflation, and then that leads to another kind of wage price spiral. So that is what we saw between 2008 onwards, so around 2011-12. But that resulted in an era of very high inflation in India, and then we had a series of interest rate hikes. This time around, we're not expecting a significant wage price spiral. That is something that we will watch out for. But as of now, as long as the government allocation to rural areas doesn't see a significant pickup, I think the chances of rural wages also going up very substantially remains limited. But from a consumption standpoint, I think that could be a bit of a dampener, because your real rural wage growth is now in negative territory because your inflation is going up and your wages are not really keeping up with that.
Absolutely. So I think that's something which we need to focus on as well, because clearly it shouldn't be that the rural inflation goes ahead and dents consumption if the farm incomes are not really improved from here on. So that continues to be a key focus area as well. Teresa, anything that you think we've missed in the discussion so far?
No, I just want to, summarize, the crux of the report. So basically, we are expecting urban to do well, and urban will do better than rural. At least that is our expectation. Rural, compared to the last 3 to 6 months, we're turning incrementally positive, mainly because of an improvement in farm incomes and because of your agricultural commodity prices going up. On the rural wage earning class, I think there would be some pressure because your rural wages are actually going up at a slower pace than inflation.
Absolutely. So these are key points we should be considering as well. But thank you, Teresa, so much for this report as well. Really informative, and looking forward to much more. Thank you, and stay safe. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.